Welcome to Central Bank Central. I'm Kathleen Hayes. So much focus on China these days, the world's second largest economy. How strong is it? How weak is it? So many big events that affect the economy have just occurred. The plenum that occurs every few years concluded last week, and it seems that even some people in China are disappointed that there were not bigger steps announced by the Chinese government to move the economy forward, especially after it's suffered under the weight of a housing market crisis. So I'm joined now by Sam Radwan. He's the CEO of Enhance International. It's a consultancy that focuses on markets, investors in Greater China. That means China itself, along with Taiwan and Hong Kong. So Sam, first time on Central Bank Central. I'm very happy to have you. For you, let's see. For me, it's almost 8 o'clock at night. So I hope you've had your breakfast or at least your cup of coffee.
Certainly a cup of tea here. That's what you do in China.
Okay, that's right. What am I saying? Uh, well, of course, your company you're based in Chicago. You have offices, if I've got it right, Beijing, Shanghai, Chicago, New York, and Taipei. You worked for AIG years ago. You moved on to create this company with other people who were kind of involved in the same kind of work you were. So, what where do you see China now? The big question, I said, the economy. And by the way, I forgot to mention the surprise rate cut this past Monday in Asia, uh, that didn't exactly get people overly excited, even though they didn't expect it. So where do you want to start? I guess I'd like to say, for all the people you talk to, your potential, your customers, the people you're consulting, what sense do you get from them about how they feel about the economy, how the economy looks now?
Okay. Well, thank you very much for having me. And what I would like to mention is I've been doing this now for 15 years here in China. And one thing that I can attest to is the economic outlook is probably the most negative I've heard from the executives that I've been speaking to over the past 15 years,
Wow.
right? And um, certainly real estate is at the heart of it. But there's a concern that will there be business friendly new laws and regulations being put in place moving forward? Will the real estate problem be solved? And also, will trade relations improve, which is going to be critical given the direction that the Chinese economy is heading into right now?
Well, so let's start, I guess, with because you said you've been doing this for 15 years. And hey, remember how China had what? 14% GDP target, then 11. Oh, we could, and now they're back kind of in a place that would have seemed weak at one time, but something like 4 to 5% on their GDP. When you step back, what happened to China? Is this just sort of natural? You can't grow double digits forever. You obviously have to get in the bigger your economy gets, you're going to have a slower rate of growth, but you're growing off a bigger base. But what are the issues now? What is the big issue you think that's weighing on the Chinese economy so much?
Well, I would say it's the consumer at the heart, right? And basically, there are multiple elements to the consumer that we need to take a close look at, right? One is consumer confidence, which is what we spoke about, right? And it's just not there, right? So, for example, we're having lunch with some of the executives, and the entire conversation was around the fact that they want to pay off their homes, right? Because they're not very confident about what the future looks like, right? In the U.S. and other places, for example, you when you think of retirement, you're thinking of your 401k as your safety net. In China, when you have investable assets, right, you have a tendency to buy a second and a third home, right? That is your 401k, more or less, right? And they're watching the values of those safety nets continue to go down, right? So one is certainly the whole topic of consumer confidence and how that's dampening spend in multiple areas. The example that I'd like to give is online sales is a very good indicator of where the mood is. It's down 7% year over year, right? Domestically, car sales, China's leading the world when it comes to EV production, etc. But when it comes to domestic car sales, it's down 6% year over year, right? Uh, and it is not just a question of the fact that the population is aging. It is more related to two factors. One thing COVID taught them is they need a social safety net, and it's not there, right? And not only that, but what they relied on in terms of investments is going down in value. And the second factor is more politically focused, right? Which is they're seeing the tension around trade relations, not just with the US, but with Europe as well. And they're wondering whether these are solvable or not, given the tense situation that you have in place right now.
Well, and yes, and of course this question, as I mentioned, Janet Yellen going to Brazil for the G7 meetings, and we know that that's one of the things everybody wants to discuss. China, what's China doing, and overcapacity, too much excess inventory, so trying to send it overseas, etc. But I think another point that you make is interesting, that China is still at this point, it's a tale of two cities. I love it. You've got a roaring supply side, especially in new technology, right? But then, as you said, this demand, I think it first started going south during the pandemic, right? That was such a tough time for the Chinese people. And then next thing you know, the government wants to crack down on the property developers because they're indebted. And of course, they seem to help kind of throw more fuel on that fire. So how is that going to play out? I mean, and if people want to try to offload their homes and they can't, do you think China's just going to be stuck in a low gear for a long time? Again, the plenum, where I think people were waiting for okay, we're going to move ahead. We're going to come up with things, new steps, based on the steps we've already put in place. And President Xi, of course, totally in control of this now. There's none of the past presidents with their kind of policies so much affecting what he's doing. This is all his vision now. So what didn't they do that they need to do or should do next?
Well, let me start with your first question in terms of where is this going, right? In our view, it is now very, very difficult to tell where the bottom is, right? So, for example, we track information around foreclosures. Alibaba provides auctions for foreclosures. And what we're seeing is an actual acceleration in the rate of foreclosures. And we're forecasting around 4 million foreclosures cumulative from now since 2019. So we're not seeing a bottom in any way in terms of where this situation with foreclosures is going. And same with home prices, right? Home prices has, ever since 2019 till now, is not finding a bottom. And the reduction in home prices is not decelerating in terms of a rate, right? So it's very difficult for us to say, this is when we're going to see some sort of stability or the light at the end of the tunnel. I think we're going to continue on like this at least for a year. And then the question is, a year from now, will you start seeing some stability? So that, in a way, gives you a sense of where the pessimism comes from, right? Is nobody's able to see the light at the end of the tunnel. And given that real estate is at the heart of the economy, right? Not just from a retail perspective, we can take the example of the insurance industry, for example, right? Even though the insurance industry is a major financial institutional investor in China, right? Even though if you look at their balance sheet, you're going to find that 2% is directly invested in the real estate market. When you start looking at indirect investment, i.e. loans associated with real estate, you're looking at 10 to 15% of their assets that are in that space, right? So everybody's aware of how this is kind of at the heart of the issue, right? And nobody's seeing the light at the end of the tunnel. right? Which kind of gives you a sense of why so much pessimism is in the market right now.
So
Now back,
well,
go ahead.
I was going to ask you to go tell us more then, or we finish that thought, but and then go to the next thought, I guess, which is, so what about the roaring supply side that you mentioned? Where is that, and how is that driving the economy at this point? And to what extent is that, as you just said, also, that's another thing that worries people because they know that there's a lot of pushback against Chinese exports. And with a presidential race, in full swing now in the US, Biden already put tariffs on chips, and Trump has, of course, he's not running now, it's Kamala Harris, but she's part of that team. And Trump has threatened to put tariffs on just about everything.
Yes, and that's a very good point. And if you look at the export numbers, they are pretty front-loaded with the idea that they're looking to see to it that they can get the most out of the export side before tariffs start kicking in. And the focus right now is on Europe. And the EV market is a big driver of these numbers that you're seeing. So, for example, EV production is up 34%. By far, a key driver of the numbers that you're seeing in terms of GDP growth is in that particular area. And Europe is in an interesting situation where they have outsourced a lot of the production of these type of vehicles to China, right? So there is a tremendous PR effort right now going on from the Chinese side to see to it that they're able to tamp down a little bit of the rhetoric that is taking place in European countries on a different scale. To see to it that they continue to see to it that this is a market that accepts this overproduction, if you want to call it, of these type of new technologies, and that they're importers of that. The second part is, as you can see how aggressive the PBOC is in cutting rates, you're going to see them be even more aggressive once the Federal Reserve starts cutting. And they will play along very quickly and very swiftly to see to it that now you can make the argument that this whole shift to a consumer-driven economy is not working. Now they are placing big bets on going back to what they used to do before, which is to be the exporter to the world, and the focus is on newer technology.
Well, that's a lot to absorb in so many ways for the Chinese economy. I think it's very interesting that you point out that and that's true for a lot of emerging markets. Always have a hard time calling China an emerging market because it's such a big, in so many ways, strong economy. But that once the Fed starts cutting, that opens the door for a lot of other countries to cut too. How about the banks? How about the financial sector? What kind of shape are they in?
Well, we talked a little bit about the insurance companies. I'd like to talk about banks a little, right? So banks are certainly in a situation where they are sitting on a good amount of bad loans, right? The amount is obviously kept close to the vest. But you can make the argument, though, that with rates being cut, that you may start seeing growth in loans to businesses and growth to loans as it relates to mortgages and reviving the real estate market. But you're actually seeing an interesting trend that's slightly different than that. You're actually seeing a flattening out of the growth of mortgages and growth of business loans. And the reason being is, as rates go down, you're seeing more and more prepayments take place that are offsetting any new loans that may take place associated with buying new homes. So as mentioned with the anecdotal example that I gave you, it is actually translating into what we're seeing in terms of banks, which is, as rates are getting cut, there's more and more prepayments of the old loans, and there are more and more attempts to pay off your home mortgage. That is definitely a trend that you're seeing in that area. Now, if you look at the insurance industry, it is a slightly more difficult or challenging situation that they're running into. Where let's start with the life insurance business, because by far their assets that they hold are significantly larger than the property and casualty side. The life insurance business products in China, more than 90% of it are interest rate sensitive. In other words, they're guaranteeing you a rate, and as rates drop, their investment returns are not able to keep up with what they're guaranteeing, right? So, I mean, compare this to the US, where 40% or so of their books of business are interest rate sensitive. So they're definitely going to go into a very challenging time as rates get cut, with them watching their investment income dwindle. Similarly, with the property and casualty side, where they were relying less on operational income and more on investment income, that is getting eroded. Okay, so you're going to start seeing some tough times for the insurance industry in China, and that has a ripple effect because these are companies that are holding on to key assets in the Chinese economy.
So what, when you advise people, Enhance International Consultancy, Greater China focused, what kind of questions are they asking, and what are you advising them to do in an economy now that seems it's in a tough spot in a lot of ways with with demand, with supply, and again, like you say, when you say it's a tale kind of two economies in a way, is it the case that, well, go for the export part of the economy, go for like you say, the electric vehicles and and I guess that's another thing, that the plenum, the big meeting the government has every few years to make plans, revise, update its economic and growth plan, etc. What do you hear and what do you see in terms of how much that is going to work? That it's going to take time. Chinese are patient, right? They think long term. What is that going to mean? What is it going to mean for people watching China? What people thinking of investing in China? Is that an area they should be looking at?
Well, let me start by saying that the first thing that is clear, and I basically make clear to my clients, is these low interest rate environment that you're looking at in China is here to stay. And we're talking not just this year or next, but maybe even decades, right? So the question is, how do you start managing your business in a low interest rate environment is by far the key element that the risk management group needs to look at, and at least in the financial services and the insurance industry that we're looking at. This is not new. For example, Europe has gone through something very similar. But that is something that definitely now needs to be the focus of these organizations of managing their business as a whole. The days of 30 to 40% growth in the financial services market, especially in the insurance market, etc., is gone. And the high rates that they were able, the high investment returns of 5% and 4%, I think, are gone for a very, very long time. And now they need to look at shoring up their operations and focusing more on operating profits. The market that, regardless of what slowdown will occur in China, that will be resilient in our view. You mentioned, for example, the EV market. Looking at the EV market and talking to some of the EV players, you can make the argument that yes, there is a lot of potential and opportunity in that particular area. But keep in mind that a lot of these companies that I'm talking to are very, very cash strapped, right? They're burning through a lot of cash. So the point is, once again, they are making very big bets that their overproduction or their rate of production is going to be absorbed by the rest of the world. So there's some risk there. The other market that I would like to point out to is, back to the consumer, is the number of retirees in China by 2050 are going to exceed the entire population of the United States, right? Over 300 million. So that market is going to grow in a very orderly way. And that's where the big opportunity is for the China market, right? I mean, you take a look at, for example, Japan, where I just visited, right? Despite the slowdown in the economy, you're definitely seeing the health insurance and the healthcare sector part of the economy still a key focus and growing steadily. And there are ways to take advantage of that particular growth area.
So, we watch, the US economy can be a big driver for the rest of the world, right? And China certainly in Asia has been often a big driver for growth, right? I mean, a lot of South Asian nations, many emerging market nations uh, work with China, right? They sell exports to China. I mean, China exports a lot, but this is a big market for those countries as well. So I'm thinking, we saw China again, so growing so fast, the second biggest economy in the world, and such a powerhouse. How would you describe what China is now and what it's going to be in this context of a global economy?
Well, I think China right now, given its nationalist government, right, is going to have a very hard time getting consumer confidence or consumer optimism to where it is. They're going to need some sort of a miracle, politically speaking, in terms of better relations with the US and Europe. Because really what you're seeing is if I were to look at the 15 years that I've been in China, right? It was a situation where they were slowly trying to move from an export-based economy to a consumer-based economy. I think what the plenum has made it clear is now they're reversing this again, right? And they're now trying to go back to being an export-based economy, right? Maybe not a low-cost provider, but more of an export-based economy in new technology, right? But it's clear to say that moving to a consumer-based economy, it's just not there, and it's not going to be there for a while, right? So it's almost like they're doing a reverse in terms of where the focus is going to be, right? With a slight caveat of focusing on new technology. So that's what, in my view, what the next 5 years hold in terms of the shift in the Chinese economy.
So in terms of again, dealing with the West, dealing with the US, what do people say there? I mean, do they think, well, gosh, if Trump gets elected, he's going to just put tariffs on everything we do? Is there going to, or are they saying we think there's a way to work with him? If the Democrats get elected, Kamala Harris and people, maybe they have more power in the House of Representatives and the Senate again, are they thinking, well, maybe they won't be much better than Trump because, President Biden has also used tariffs, certainly on chips, as a kind of a weapon, right? Kind of an economic weapon with China.
Yeah, it's more of the latter, right? I mean, there was no question about it that China is following the elections in the US very, very closely. They're also following what's happening in Europe very closely as well, right? And certainly when it was a situation before Biden decided not to run anymore, prior to that, they were almost succumbing to the fact that, it's going to be Trump and it's going to be tough times moving forward, right? So we really need to start thinking about Plan B in terms of where else can we build relationships. Are there pockets in Europe that we can look at, et cetera, the global South, et cetera. So there is definitely a very, very diplomatic element associated with this effort of reviving the economy that you're going to see a lot more emphasis on, right? will Kamala Harris be a better alternative? They're not banking big on that, but certainly they are banking on the fact that it'll be a much better situation than a Trump situation. Yes. So they're definitely bracing themselves for the fact that when Trump's comes into power, right, that it's going to be tough times, especially as it relates to trade with America, right? And
go ahead. No, finish your thought, please, please. This is fascinating.
no, but I just want to re-emphasize the point that I made earlier about why am I claiming that the pessimism is the most that I've seen over the past 15 years.
Yeah. Well, and as you walk us through all of this, and you talk about how the weak consumer sentiment, the consumption, how hard it's going to be to pump it up. And that's a problem, because you could say, well, look, if the world's getting more compartmentalized, and there won't be so much trade, and it'll be more, near shoring, or all the things that people have been talking about the past few years, it'd be naturally the best time to say, hey, you've got 1.4, billion people, just your own people spending, right? And you could meet their demands, and you could say, how well, China would probably do fine. But your point is that right now, after there's just people are more concerned about, hey, I want to see if I can sell one of these houses I purchased, thinking that was going to, carry me over into a comfortable old age, that they're looking at ways around that. And we know that a lot of the local governments they're still loaded down with debt, right? And they're unable to climb out very quickly from that. I remember reading a couple stories about how much businesses have cut back. One manager whose salary was cut by 35%, and he could no longer meet his mortgage. So, wow, it's a very so what happens next then? Do we just going to say it's going to be low growth in China? They're going to hope that the export side, they develop markets that work and keep them going. Is there going to be a big recession in China? Is it just going to be bumping along? What do you think?
Well, let me tell you about the two indicators that we follow very closely, right? One is the 10-year bond, right? And it is a very good indicator of what the sentiment is for China in the long term. And insurance companies and banks rely very heavily on that type of asset, be it to invest in it or to look at it as a collateral. And once the cut, so ever since January of this year, right, that rate has been falling from 3%, and now it's at 2.2%, right? The recent cut that the PBOC made barely made any difference, which is a good indicator. The other indicator that we look at closely is we're looking at this acceleration in foreclosures, right? The real estate and the housing market is a key pillar that has to be fixed if you want to have any chance of getting consumer confidence back up, given how central it is. We're looking at that closely, and we're trying to see, is it going to start to decelerate at some point? It's not looking like it's going to be the case here in the near future, certainly not in the next 6 months or so, right? But that's another very good indicator of trying to see, once we start seeing some kind of bottom in the real estate market, then maybe you can start saying that, okay, China is out of the woods, right? And ready to look at the consumer again and see a pickup in consumer confidence. Certainly the social safety net is another factor, but I believe the real estate market is a key indicator there. And then last but not least is the Chinese economy is now so vulnerable, or more vulnerable, to the geopolitical situation, that any geopolitical shock, right, is bad news for China.
Do people in China worry much about the fact that the Ukraine-Russia war continues, and that China, to whatever extent you want to call it, is aligned with Russia? And is that, when you're talking about being vulnerable to the geopolitics, that China is is that one of the things that's on people's minds?
Well, I would like to share with you a rumor, and I don't think it has any basis to it. But the rumor that's going around in China, which I found it to be odd, is they view that if Trump gets elected, right, that he is going to ally with Putin against China, right,
Hmm.
which is an interesting factor, right? Uh, I don't necessarily see that. But to answer your question, they are. Uh, concerned about what's happening in Ukraine from a standpoint of what kind of ripple effect will it have in terms of either having uh, um, the U.S. continue to look at China negatively because of the relationship with Russia. Will that mean more sanctions, more tariffs, etc., so on and so forth? So it's all within a relationship of, why, what is their relationship with Russia going to do to them as it relates to how the rest of the West will look at Russia and the relationship between Russia and China, right?
Taiwan, the picture you paint of the vulnerability of the Chinese economy right now, a housing market that is still going down, right? That has not been resolved and is going to weigh on so many aspects of sentiment of spending, so many things like that. Is China really in a position where Xi Jinping would seriously consider, doing anything more than sort of rattling sabers and, you know, sending ships close to the areas where they're not supposed to be in? I mean, it seems like they're it would make a tough situation tougher if the Chinese were to take any steps, serious steps in that direction at this point.
And I don't think they will, right? I mean, I think the general approach that you're seeing right now is more of a reconciliatory approach, right? But having said that, though, you have to keep in mind that you're dealing with a nationalist government. Right. One thing I've learned, and maybe this is something new to your viewers, but given that I spent time in Taiwan and China, I used to think that the Taiwan issue was a sensitive issue for the government. It's actually a sensitive issue for every Chinese citizen, right? So it's not just a nationalist issue for the government, it's for every citizen in China that I've spoken to at least, right? Both from the senior executives down to the gardener in the hotel that I'm at that likes to talk to me every once in a while, right? So I don't think you're going to see any provocation on their part, but at the end of the day, they have to react to anything that they believe that is tarnishing to their reputation or their, position in the region. Yes, so they will react, but I believe now that they're in the mode of how can we find a way out of this tit for tat, right? And really try to see to it that we are able to now refocus on building economic ties.
Well, as we wrap this up, we've had a tremendous conversation. Thank you. We've covered so much ground, very illuminating. And again, you've run the consultancy CEO, Enhance International for 15 years. You spent a lot of time in Asia, certainly a lot of time in China. What is the question or the thought that you would like to leave us with? What should we be watching? What should we be thinking when it comes to China?
Well, in terms of China, as mentioned, if your audiences are primarily in the investment side of the world, right? As mentioned, I'd watch very closely, how the government is going to be able, and will the government be able to resolve the real estate issue, right? I can say that number one, it's probably not solvable in the next year or two. And it is something that, if solvable, you can start, revisiting China and saying, yes, this is a market now where we can revisit the topic of consumer spending and consumer confidence in that market. But I don't see this in the next few years. Right. So I would, like everybody is doing, is, you can watch this area closely, but you need to get a little bit more granular about it in terms of looking at this information, and would be a very good indicator for you in terms of when will China start turning the corner. And I'm hopeful that it will, but it's certainly not going to be in the near future, from what I see.
Well, then I guess part two of this, as we wrap things up, you did mention that as soon as the Federal Reserve starts cutting rates, we can see the People's Bank of China, its central bank, cutting rates as well. What kind of, what kind of rate cuts do you think we'll see in terms of where they are now and where they could get to?
Well, I mean, they're cutting them, by 10 basis points, right? So for the 7 day, it's down to 1.7. Um, it is very, very difficult to say because unlike the US, where there's a lot of predictions in terms of where rates can go down, there is nothing that you read in the news in terms of indicators, in terms of what the PBOC is planning to do. But one thing I think I'm fairly confident about is that, every time the Federal Reserve cuts, you will see a cut from the PBOC. I believe you can say with high probability, probably over 50% that will take place. And it'll be just as, as same rate as you saw in the recent cut, 10 basis points, etc., may take place. So it's literally a question. You tell me how low the U.S. will go, and I'll tell you how low the the PBOC will go.
Well, maybe we'll do that in our next conversation, huh?
Sounds good to me.
Okay. Sam Radwan, thank you so very much. First time on Central Bank Central, CEO of Enhance International, based in Chicago, working all over Asia, certainly China. Thank you so much for joining me.
Thank you. My pleasure. Thank you very much. Have a good day.
This is Central Bank Central. I'm Kathleen Hayes.